Howdy, folks. Welcome to Liberty Call. Today is Tuesday, August 6th, 2024. Hope you're having a fantastical day out there. I'm covered in drywall dust, so if I appear a little messy, I apologize. I've sand in a wall after patching a hole that was put in when the builders built this house. They put in some upper cabinets over the dining room bottom cabinet, which I've already replaced. After we replaced it, we're like, the upper cabinets look 50 years old and the bottom cabinets look brand new. So let's, first we were going to strip them and restain it. And then after suffering through the smell of paint stripper for a week, made the decision that we were going to rip them off. So as I got them off the wall, I guess they didn't fit originally. So they busted up the drywall on the right-hand side so that they could get it in. And so I had to go and, cut some straight edges, put a fresh piece in. And now I'm taped it and mudded it. And today I was sanding it. So, and all the little holes along the back of the wall from where they, drilled and screwed it into the wall. So anyways, you don't care about that. You don't care about my home improvements that I'm always working on. You care about what's going on in the markets. And it was a better day. I'm not sure why, but everyone thinks it. I mean, I guess people are in a better mood today. So, all right. Well, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, share, subscribe, and follow, and press that notification bell. Let's get into today's numbers and see what I was talking about. See here, Dow Jones was up 0.76%, 294 points, closed at 38,997. S&P 500 up 0.95%, 49 points, closed at 52.35. NASDAQ up 0.98%, closed at 16,358. The VIX fell 28.16% today. It's back down below 30 at 27.71. Still pretty high by my standards. Canada down 1.12%, Brazil up 0.88%, and Mexico up 1.15%. Over in Europe, Germany was down 0.1%, the UK up 0.23%, France down 0.27%, the Netherlands up 0.73%, Spain down 0.32%, Italy down 0.6%, Switzerland down 0.21%, Portugal down 0.19%. Russian exchanges were mixed today. The MOEX up 0.18%, RTSI down 0.07%. And the Asian markets, remember the Nikkei was down like 13, 14% the day before. Today it was up 10.24%. So big jump back, not quite to where they were, but sizable. Australia was up 0.41, New Zealand up 0.24. In China, the Shanghai was up 0.23, the Shenzhen Component up 0.82, China A50 down 0.66. DJ Shanghai up 0.28, Hang Seng down 0.31, and the Taiwan weighted up 3.38%. So today was a bit of a bounce back day. So like I said, nothing has really changed. I mean, the Fed is probably going to lower rates, end of next month, or mid next month. They may not. I don't know. I mean, the reports that come out over the next 4 to 6 weeks could show us that the economy is in better shape than we think. I don't know. I mean, like I said in previous broadcasts, that the reports that I cover, on like a daily basis, like the sub reports, not the big high ones, the ones that everyone, the CPI and things like that. It's more of the, manufacturing and all that sort of stuff. They're in contraction territory for 2 years now. Like I said, many times the yield curve has been inverted for 2 years. So, I don't know. I mean, my advice to folks is, like yesterday, my portfolios did great. Today, not so much, because I have everything set up for, something negative happening in the future, not necessarily more good times. So, all right, let's get to the market recap. U.S. stocks rebound on dip buying in tech following rout. All right, U.S. stocks surge on Tuesday as investors seize the opportunity to buy into depressed tech stocks after a significant decline the previous day. Tech stocks were buoyed by a strong rebound in NVIDIA as bargain hunters capitalized on the previous day's dip. This recovery occurred despite reports indicating that NVIDIA is facing delays in its rollout of its Blackwell chip. Chip sector attention continued with Supermicro Computers set to report its quarterly earnings after the market closed, with market watchers keen for insights on demand from the artificial intelligence industry. Apple struggles. Apple Inc. did not join the broader tech rally, struggling as investor sentiment was dampened by the news that Warren Buffett's Berkshire Hathaway had slashed its stake in the company by nearly 50%. Uber Technologies saw its stock soar over 11% after exceeding expectations for second quarter revenue and core profit, driven by robust demand for its ride-sharing and food delivery services. Caterpillar gained 4% following a rise in quarterly adjusted profits, supported by strong demand for its larger excavators and construction equipment, benefiting from increased U.S. infrastructure spending. Planeteer Technology surged over 12% after the software services provider raised its annual revenue and profit forecast for the second time this year. And Lucid Group also performed well, reporting better than expected second quarter revenue and announcing a substantial $1.5 billion investment from its largest shareholder, Saudi Arabia's Public Investment Fund, the PIF, resulting in a 1% increase in its share price. Media giants Walt Disney and Warner Brothers are scheduled to release their earnings on Wednesday. And wrapping things up, crypto-related stocks, including Marathon Digital and Coinbase and MicroStrategy Inc., climbed as Bitcoin steadily followed a previous day's slump. So just in typical Wall Street fashion, the panic sell-off from yesterday turned into a buying frenzy. Crazy. It's almost like the market thieves are on this roller coaster of emotion. So let's see here. What else do we got? Anything else I want to comment on here in the notes? I guess, today's losers will be tomorrow's winners and vice versa. So it's, kind of like in my case where, yesterday was great, just because of the way I have things set up. And unfortunately, when the market reverses like this on quick notice, there's really not a lot you can do. You just got to kind of wait it out. Because, personally, I think the bigger trend is downward, but we shall see. All right, next up, June international trade. This was put together by senior economist Strider Ilas at First Trust. The U.S. trade deficit in goods and services narrowed to $73.1 billion in June as exports grew faster than imports. However, focusing on total trade volume, which includes both imports and exports, provides a clearer picture of business and consumer interaction across U.S. borders. In June, total trade volume increased by $6 billion, up 6.7% from a year ago, with exports rising by 5.9% and imports rising by 7.3%. A significant shift in U.S. trade patterns is evident. Imports from China decreased by 2.2% in the first half of the year compared to the same period in 2023 and by 26.9% compared to 2022. Mexico has now become the top exporter to the U.S., with China dropping to third behind Canada. What's Canada since? Maple syrup and Molson? This shift reflects a broader realignment in global trade dynamics. Global supply chain pressures have significantly eased over the past few years. The New York Fed's Global Supply Chain Pressure Index in June was negative 0.03, standard deviations below its historical average, a stark contrast to June of 21, when it was 2.65 standard deviations above. However, volatility remains due to geopolitical issues such as Yemen's Houthi rebels disrupting container ships in the Red Sea and Bab el-Mandeb Strait affecting shipping costs. Well, if I could pause here, if the U.S. did not assist the Saudis in the continued war with the Yemeni people, most of these problems would go away. But, Uncle Sam's got to stick his nose into problems and make things worse, unfortunately. So jumping back in to finish up. Additionally, the U.S. continued its streak as a net exporter of petroleum products for the 25th consecutive month, with the dollar value of petroleum exports exceeding imports again in June. So, it seems that the U.S. is finally realizing that, you can't put all your trade eggs into one basket with China. With Mexico now being the top exporter, perhaps, we'll have fewer headaches. But I doubt it. Stability is just one of those fleeting things, especially with the idiots who run our world. So, all right, next up, Saudi Aramco sees oil demand rising by 1.6 million barrels per day in the second half of this year. This comes via Zero Hedge, and this was written by Svetlana Paraskova of oilprice.com. All right. Global oil demand is expected to rise to 1.6 million to 2 million barrels per day in the second half of the year, according to Saudi Aramco's chief executive, Amin Nasser. He stated that the recent sell-off in oil prices does not reflect the underlying fundamentals. Aramco projects total global oil demand to reach 104.7 million barrels per day for the full year 2024. Some analysts even predict demand could exceed 106 million barrels per day in the latter half of this year. Aramco's demand growth projections align more closely with those of OPEC than with the International Energy Agency. OPEC's July report maintained a global oil demand growth forecast of 2.2 million barrels per day for 2024, significantly higher than the IEA's conservative estimates of 970,000 barrels per day growth in 2024 and 980 barrels per day growth in 2025. The IEA has cited weak Chinese consumption as a factor that could dampen growth. Both OPEC and the IEA are set to release updated demand forecasts in their monthly reports for August, following several turbulent weeks in the oil market. Oil prices have recently dropped to their lowest level since January, with Brent crude to 76 per barrel. This decline is driven by concerns about the potential recession in the United States and weak oil demand in China, which have overshadowed the geopolitical risks associated with the Israel-Iran tensions. Nasser criticized the market's reaction, asserting that it has overreacted to bearish demand signals. He emphasizes that the fundamentals do not justify the recent drop in oil prices, suggesting that the market's pessimism is misplaced. And it is a bit amusing that the market freaked out over the slightest whiff of a recession or weak Chinese demand. All the while, these executives are telling us that the fundamentals are solid. But maybe they should sit down and talk to the people telling us that, we got recession on the horizon. One of these groups is right. One of them is wrong. So, again, it's kind of like the government. The spokesholes on TV will come out and say, oh, everything's fine. Everything is wonderful. We've never had a stronger economy. And it's not just the Democrats. This is a Republican. It's government in general. They're all scumbags. It's aggravating to try and, do this job for the people that I serve, when you get BS out of, out of the people you're supposed to trust. So anyways, all right, we got one more article here. This one's more just food for thought. Comes from the Mises Wire. The U.S. military machine is unsustainable, written by Jacob R. Schwartz. All right. For nearly 2 centuries, the United States has been an expansionist power, evolving from asserting regional dominance during the War of 1812 to emerging as a global superpower by the end of World War I, which we shouldn't have been involved in the first place. This transformation culminated post-World War II, establishing the U.S. as the world's leading power, significantly expanding its global military presence to counter Soviet influence during the Cold War. Well, we also put bases all over Europe and have occupied Germany since 1945. So, and plus we bombed. Germany was a industrial power prior to the Second World War, and we bombed every major city there. Dresden was just firebombed. But they like to talk about the war crimes of the Germans and the Nazi Party, but old Uncle Sam was not that good. And then you pile on top of that what happened at the end of the war with Japan when they were ready to surrender, and we vaporized 2 of their cities, which, I personally view that as a war crime myself, but, no one cares what I think. All right. Today, nearly 3 decades after the USSR's collapse, the U.S. maintains around 800 military bases in 80 countries, a costly and increasingly unjustifiable legacy of its expansionist policies. So, personally, again, stepping away is that I don't think the end of the republic is going to be, some sort of civil war. Civil war can break out. I could see that where, the states, we get 2 or 3 different factions. And, if you don't like the people living in your part of the world, you might be exporting them or deporting them back to some place that is more fitting. But I think it's just going to be insolvency. It's going to be the undoing of the United States personally. At this point, I don't care. I just would rather the republic collapse so that I can save 30% of on my taxes will disappear, or at least a big portion of it. The substantial expenditure of maintaining these bases, particularly in Europe, where the U.S. has about 300 installations, is no longer justifiable, given that European nations are now self-sufficient in defense. The persistence of these bases, originally intended to uphold liberal hegemony and deter communism, is now strategically outdated and fiscally irresponsible. The Middle East also hosts numerous U.S. bases, yet their presence has not guaranteed stability. Shocking, I know. Often inciting local resentment and unintended consequences, such as the rise of ISIS and the increased Russian aggression. Russian aggression? Really? The financial burden of sustaining such a vast military network is enormous, with annual military spending surpassing $600 billion, I'd say closer to $1 trillion, a significant portion which goes to maintaining foreign bases. Reducing the number of these bases could save billions, funds that could be better utilized to address the national debt and other domestic priorities. Contrary to interventionist concerns, reducing the U.S. military footprint does not necessarily create power vacuums. Rather, it can lead to a more focused and sustainable defense strategy. American geopolitical influence does not solely hinge on military supremacy, but can be maintained by securing its immediate sphere of influence and economic interests. In conclusion, American imperialism, characterized by an expansive and unsustainable military presence, is counterproductive. For the U.S. to remain a superpower, it must adopt a more restrained and economically sustainable approach, focusing on essential defense needs and reducing unnecessary overseas commitments. So it's almost like the the government believes that, the more bases, the more security we have, and just ignores, the price tag of empire building. So personally, I would move, I would reduce the military probably by 75%. I'd guard our own borders. I'd put the Marines on the Rio Grande. I'd, probably have some people along the northern border. Just, you could space them out. And plus, with all the technology we have today with drones and things like that, we wouldn't need a huge presence along the border. But anyways, yeah, we don't need to be, we got the carriers. They can patrol the sea lanes along with all the other stuff. We do not need to be in the Middle East causing all the problems. If Israel wants to start wars, let them fight their own wars. So, all right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. If you need to get your financial crap together, give me a call. I'd be happy to help. All right. Well, I hope everyone has a wonderful evening. It looks like the rain clouds are moving back in. We got gushed on yesterday. We were checking on our kids over in the Jacksonville and South Georgia area yesterday, and they're like, it rained a little. And it's like, it was pouring here. I mean, we got, after the last 2 weeks of, burning hot and forest fires and everything else, we finally got some rain. So I think it's put out most of the fires here along the Front Range, which, thank you. And thank you to the firemen. Y'all do a great job. And anyway, so, all right. Well, like I said, hope everyone has a great evening, and I shall talk to all y'all again next time. Adios.